following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the world of trading this morning. We had a pretty wild opening last night. Well, not wild yet, but I'm sure it's going to get wilder. The first chart I showed today was, we opened about 100 lower in the Dow. That was about, I think it was about 14 or 15 lower in the S&P. We since rallied to be up about 8 points, and now we're just in the midst of this. What I wanted to share with you, I don't know, a lot of you folks are, shorter term traders, and you see some of this volatility and you wonder, how can it do this? I mean, these markets are doing normal things, folks. This is nothing at all unusual. If we look at the Dow last night, you'll notice here that you'll see the gap down there at 1700 hours on November the 15th, which was Sunday night. And if you'll look to the left of that, you'll see the last rally we had before the market closed on Friday. You'll notice that the Dow rallied 135 points. Well, that's exactly what happened last night. The Dow rallied 135 points, and then it sold off a little bit since there. Not much, but a little bit. It's just showing that these equal rallies are happening all over the place. If you were to take a look at the German DAX, it did exactly the same thing as its previous rally. If you look at gold, it did exactly the same thing as its previous rally. So these markets are just repeating over and over again, what they usually do. And I know some of you don't have a chance to sit there and look at it overnight or anything, but, when you come in the morning, you should check to see, what's happened in the past, because what happens in the past has a tendency to tell us, what's happening in the future. That's the way you should look at it, because nothing's new under the sun. These patterns have been around forever. They're going to continue to be around if the markets keep trading freely, but we'll wait and see. As far as the news from France, as tragic as it is, it's a horrible thing that we all have to live with. I personally believe that we should take the stance that Israel takes, that everyone that is born in that country is a soldier. And you should be treated as such. If you're taken prisoner, you're a prisoner of war, and that's how it should be done. You shouldn't, buckle into terrorism, because as soon as you do, one thing just leads to another, and you'll see what happens. I don't know how they're going to handle this, but I know what I would do if I was president of the United States. I would try to, put an end to it, but we'll have to wait and see. I'm not running, by the way. I've talked to Trump, and I won't be able to overcome him this year, so I'm not going to run for president, even though I was thinking really seriously about it. Okay, folks, we're going to take a look at the chart that we really should pay attention to, and that is this New York Stock Exchange index chart on the weekly pattern. This has so much information in it, and has a lot more information now. If you look to the right, where we are now, the upper blue box that's there, you'll notice that how the market came down very, very sharply this last week. Now, if you go to the left and look what happened in 2007 after we made the 61% retracement, and you can see these moves are almost exactly equal. And so that's the main thing of what we're watching when we're doing this. You'll bear with me here 1 second here, because the Canadian dollar just made a new high, I believe, and I'm in the process of wanting to sell that. So I'm wanting to watch what's going to happen with this. Anyway, let's get back to this overall New York Stock Exchange index chart. This is just the way it started is extremely bearish. The problem is, folks, we're coming into a market that's incredibly oversold. I mean, we're down, I think, 8 out of the last 10 days. So we are oversold. That doesn't mean we can't go a lot lower, because the overall bearishness on these charts is just something that you can't imagine. I'm going to cover a few of these stocks that have been the favorites of everything, and the whole premise of this thing, this whole rally, has been predicated on about 150 stocks. There's about 100 of them, 120 or so, maybe 130 in the S&P 500, about 15 or so in the Dow Jones, the real expensive ones, Disney, Nike, those. And then you have the NASDAQ stocks, which are Amazon, Google, those stocks that are high price ones. And since it's cap weighted, that's what makes it move. But if you look at some of these, they don't look nearly as bullish as they did just recently. If we just take the Simon Sell, you guys are pretty funny in here sometimes. Okay, we'll take a look here at the price of the most heavily held stock in the whole world, which is Apple. And as you can see, after we hit that 786 retracement 8 days ago, up at the 124 level, by the way, it came within 7 cents of the exact number. And we have now broken about 10%, a little bit more than 10% in Apple to get us to where we are right now. It's trading at about 110 this morning from what they said this morning when I was watching Bloomberg to get the early morning update. But these charts, folks, are just so bearish that I go through them. I went through more charts in these last couple of weeks than I've looked at in a long time, because I don't look at a lot of stock charts. Most of my stuff is focused on the futures and foreign exchange. That's what I'm trying to look at when I'm watching these things. So we'll see what's happening now. For one of the first questions coming out of the this weekend was what's happening to the oil market, and we've been talking about oil having this pretty strong support that we had over the past few days. And it looks like last night we rallied up to the 78.6% of the previous day's high that came in at the 4170 level. And now we're trading back down near the Fibonacci number at 4060 again. And if we go below that, we could be looking at a potential double bottom in the oil. But anything below $37 a barrel, folks, sets up a lot lower prices. I mean, even lower than $30 a barrel. And as you remember, back in 2009, oil did get down, to $33 a barrel, and we could certainly see that happening again. We'll have to wait and see, what the prices are going to do, and if they do hold this level, we'll have to wait and see if it's going to be the case. One of the problems that we have from if you're trying to be buying this week, and this is something that is I know a lot of you folks are buying and stuff, and I guess that's all right, but I think you better be really careful. If you'll notice, this is the Dow Jones weekly chart, and as you can see, we came down 12 weeks where we dropped well over 10%, and then we rallied back for 12 weeks. But look what happened in the first week, which was last week. The first week down. It's down 3% in the first week. Folks, this is not a good chart picture. It really isn't. When you add this to what's happening to the New York Stock Exchange Index, which is the real market, that's 2,400 issues of the most liquid and heavily capitalized stocks. There are foreign stocks in there too, so it's a combination of seven. But these are New York Stock Exchange listed stocks that are the biggest in the world. Now, there's not a futures for this. There used to be. It was called the Knife, but they quit that a few years ago because it couldn't compete with the S&P, the NASDAQ, and the Dow Jones. So that's the bottom line on that. But this is a really bearish chart. When you look at these charts, one right after another, they look really bad. Now, one of the most bullish of all has been Google, and I want to bring this up and show you, because these are the markets that have been pushing this thing up. And if these things fail, you can imagine, where we'll be looking at, because over 25%, well, that's true, 50% of the stocks on the New York Stock Exchange Index are below the 200-day moving average. The same is true of the S&P 500. So it's just those handful of stocks that have been making things go. And that's the key thing. Now, two things that you want to keep in mind if these markets are really bullish is how is it going to handle the good news or bad news. Last week, we had news on Alibaba. They'd sold $10 billion in 12 hours online. Well, we don't know if those figures are right, but that's what they told us. What did the market do? The market did not believe those figures. The stock immediately started to sell off and just continued to drop. So that's telling you that the market is not reacting well to good news, which is not a very good sign. Now, today on Bloomberg, they featured a special showing that what's happened in the past when we've had terrorist things occurring, you know, from 9/11, of course, and the thing in Benghazi, some of the when we lost 280 Marines back in Lebanon many years ago. But there were over a period of 30 years or so, we've had airplanes go out, and you know, by terrorism and stuff, and it showed the market basically just shrugs it off. And I agree with that, because the market runs on cycles that are irrelated to terrorism. Terrorism will make a one-time problem, but that's about it. I only had one time in my whole trading career where something like that actually worked in my favor. I was in the gold pit, and I was trying to sell. I only traded 3 gold at a time, and this was one of my first or second weeks. No, it was more than that. I got there in April, and no, I got there in February, and this was August. So I'd been there a few months. I was trading in gold, and I was trying to sell 3 gold at a certain price, and this one broker just kept getting up in my face trying to get me to sell it, you know, 30 cents cheaper than I wanted to do it, and he wanted me to do a larger size, take 10, take 10, take 10, and finally I just got upset with him, and I took the 10 lot. I sold 10 to him, so I was short 10 gold, and I, angry with myself, I walked out of the pit. I walked all the way back to the trading desk for Lynn Waldock, and I gave Reggie the order. I said, Reggie, I got to put a stop in here on this, and it was August, and of I think it was, I don't remember the exact year, it was 82 or 83, I don't remember when it was, but that was, at that moment, they just shot down a Korean airliner. North Korea, I believe, shot it out of the air, and for some reason, the gold, instead of rallying like it should have at that time, dropped immediately, you know, $10. And I was, I couldn't believe I had a big windfall like that. So I went in and I covered it. And from that time, I never went into the pits after that. So that's the only time that I've ever done this where it actually, you know, worked in my favor. So who knows? Anyway, these stock charts on all of these things, folk, they look so very, very bearish that it's just hard to believe. There's one chart that I want to share with you when we get back from the break, and that's about this auction that's been going on with Sotheby's, with the Italian painting by Magdaleni that sold for $170 million. I swear I wouldn't buy it at a garage sale. Anyway, we'll be right back after these words from our sponsor, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've been asked to bring up the chart of the Canadian dollar because I was just talking about it, so I thought I would be kind enough to do it for you folks since you're so nice. This is a chart that we've been watching for quite some time. As you can see, it made that first stop up there in that 134.15 and immediately dropped 300 pips. And now we're going back and testing this top one more time. We want to see it make another high here above this 134.55, 134.60 level, and then not run away. I mean, if it has a lot of power, the way you handle it is you let that price get hit, and you either put your sell stop right below that or sell it there and risk about 20 or 30 pips. That's your choice of what to do, but it's a completed pattern long term. Now, there's also the possibility that the U.S. dollar could really go bonkers to the upside. And this is the next chart that I wanted to show you, and this is from my good friend Bart. And I asked him to do this chart for me because what I asked him to do was to invert the dollar index versus commodity prices. In other words, what you're seeing here in the blue line is the commodity index, but it's upside down because commodity prices have been dropping like crazy. But this is showing you that when you have a higher dollar, you have lower commodity prices. And this is something that the Fed does not really want. They are afraid of deflation. It's ironically because, back in 1980, the big demon was inflation. And now 35 years later, we're looking at the big demon as deflation. And this is what happens is if the dollar gets too strong, it's going to push prices down even lower and lower. So we'll wait and see. Now, the dollar index is affected not just by the euro. You've got the Canadian, the Swiss, and all these others in there, especially the pound, the yen, and the New Zealand dollar. Those are the big six. And so we're at critical levels in here, but this is what we're watching here, is because this is what's preventing, I believe, the Federal Reserve from raising interest rates, is because they're afraid of a collapsing U.S. dollar, and that's what even push things a little lower. When you have a strong U.S. dollar, and that means that foreign companies that means their earnings are going to be down a little bit because of that. So that's what we're watching here. Now, I don't use that as a trading vehicle of any kind. All I do is I look at it to try to think of why they could be doing something. We already know the commodity prices have just been going into the sewer. We've been watching all of these things. In fact, we're not too far away from a bottom in copper. We don't believe we're within about probably 8 or 10 cents, and we'll see if that's going to be the case. And so we'll look at copper, and we've had a request here to take a look at the yen, which has been acting very, very nicely. And you'll notice the yen chart that we talked about last week when this was happening was making a 20-man line, which is nothing more than Jim's 20-man's way of looking at charts. He goes back and looks at the previous touches of these trend lines and watches for them to retouch on the other. What I do is I look for the numbers to come in near those 786 levels, and as you can see here on the Japanese yen, it came in there pretty much spot on at that level. So it's starting to hold. Whether that's going to hold for a very long time or not, I don't know, but we'll have to, keep in mind, what happens to some of these things as they start trading. But these currency markets are really poised to have big moves. The dollar could really explode out of here. And with the dollar yen, folks, you have to remember this back when Japan was king of the hill, and they announced today they were in their second recession in 3 years. But when they were the king of the hill back in December of 1989, that with the Nikkei trading at 39,000 and change, almost at 40,000, the yen was trading at 360. Now it's at 120, 123. I mean, that's just, you can imagine what this thing could do if it really started to move. So there's a possibility that one of these things could happen. I believe you're going to see some wild swings in the foreign exchange for a lot of different reasons. I don't think it'll be related to terrorism in any way, but that's the bottom line of what we're looking at here. And when we get to the euro, we still believe the euro is headed towards. Just give me a second here to pull this up. We still believe that the euro is headed towards parity, down around 100 to 99. We're trading at 107 and change right now, so it's got a little bit more to go to the downside. But just over the past several months, we had a very, very small ABCD pattern up at that 117 level, and we've been straight down since that, and that gives another indication that we are heading towards much lower levels the way we look at it. So we're going to take a little break here. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were talking about the different currencies that are moving around quite a bit, which is normal. We also had a situation now in gold. Last night, we had the same type of rally that we had in the Dow Jones, where rallied equally to its past swings. We did exactly the same thing in the gold market also. It rallied exactly up into that, almost to the $1,100 an ounce level. It got to 1098 in change, and now it's sold off to 1084. We still look like we're going lower in these metals. At least for the short term, I believe. If we take a look at the long-term chart on platinum here, going over well, it's not long-term, over the past 3 or 4 weeks, you'll see we're within about $6 or $8 of a pretty good bottom, a 3 drive to a bottom pattern in the platinum coming in at that point, and that's fitting in with what we're seeing in the copper, and also could be in the gold market. We could get down to the 1049 level in the gold. we will bring the gold one up next to show you, because that's the one that everybody seems to be, very, very interested in. But the little rally that we had last night, oh dear, don't tell me my thing's frozen up. There we go. We did get a rally, as you can see, up near the $1,100 level, and now we're back to where we were on Friday. We're back to unchanged, indicating that, we are going lower. We've been down for 13 days in the gold market, which is very unusual. That makes it an outlier event. And the fact that we took out the previous day's highs by just a little bit and didn't go anywhere usually means that we're probably getting ready to go a lower. But we think the next support in the gold could come in at this $1,050 an ounce level, and that would be a spot that we could possibly take a look at gold. But it's still in a very, very strong bear market. We've had two major ABCD moves. The last one was at $11.92, and we're over $100 an ounce in 2 weeks lower. So that tells us that this market is still under a great deal of stress, and that's that's pretty much what we're looking at when we're watching these this morning in the complex. Now, as you are quite aware, is that we had a really bad retail sales number for Nordstrom's and Macy's and some of these other big retailers coming into the big holiday season. But if we take a look at the consumer staples ETF, which is XLP, you'll notice that we've had a 3 drive to a top pattern, and with that, we've had a pretty good sell-off. But again, we are incredibly oversold in this, and that's why it's not unusual to see the market rally from this level. But the quality of the rally is what we want to be watching, folks. There's two things that are important, that I think are important from a technical standpoint: how the market handles good news and also bad news. In other words, if you have really good news and the market doesn't do anything, that's really bad. That's what happened to Alibaba. And if you have bad news and the market doesn't go down, that's a good thing, because there's nothing else to push it down. So that's what you want to be watching. The second thing is to watch for the 382% retracement over a 3 to 5 day period. But usually in markets that are really bearish, you're only going to get about a 3-day rally. And as you know, we do have a cycle low due between the 16th and 17th from our friend Norm Winsky at Astro Trends. So if we bottom here, like Monday or Tuesday, and we might have already bottomed, then we would be looking at a little bit of a rally, and we'll see the quality of that rally, because it's not going to fall down free fall like we did in August. At least I don't think it will. And even though as bearish as I am, I don't think it's going to be going to be as bad as what people think it's going to be doing. So we want to watch that very, very closely. So the market's open a little lower. We've already jumped about 10 points in the S&P here in the last few minutes, and we got just all the indices are up now. We've got the NASDAQ up, we got the Dow up, and we have the NASDAQ, Dow, and the S&P. All three of them are actually doing much better. The gold market, we have a question of, do I think this gold is going to hold last week's low at 1073? No, I do not. And the reason for that is it makes you believe that, we're looking at something that would tell us that we want to be moving down towards the 1050 level in the gold, and then I will take a look at it then. That's related to what's happening, in the platinum also. So you want to keep that in mind as far as, what you're looking at for a good place to enter the gold market, if in fact that's what we get. So we'll wait and see. So we are getting a little bit of a bounce. That tells us the end of the world has been put off for a few more times, which is a good thing. So we'll wait and see what the quality of this next rally will be here in some of these indices. But longer term, folks, this thing really, really looks bad. I mean, this is not a very good thing if you're looking at it that way. It has a tremendous amount of bearishness on the long-term charts when you look at all those indices, you look at those big stocks that we're looking at. And maybe I'm all wrong here, and this was a great buying opportunity today. I don't think that's the case, but that's neither here nor there. Now I wanted to share with you the price of Sotheby's. That's the big auction house that you all know, and this was brought to my attention by one of the folks here in the den, and it shows the long-term picture of Sotheby's going back to 1990, and how the price of the stock, which the symbol for Sotheby's is bid. And those of you that ever watched any movies, you'll notice that when you see all these people in the auction houses with their little paddles with their numbers on it, those are their bid paddles, and that's what they're doing, is they're bidding on it. And you can see that over some of these major highs that we had, we've had some pretty big corrections. And Sotheby's just had a big auction this past week. There was an Italian painting by Magdaleni that sold for 170, a nude lady. I wouldn't buy the thing at a garage sale, but it sold for 170 million. Andy Warhol's painting of Mao sold for 48 million, and there were a couple of diamonds in there that were sold for in the 20 to 40 million dollar categories. So those are the types of things that went on. What they didn't tell you in the news, but was in the fine print that you get if you, some people that are watching this, is only 1/3 of the items that were offered in the auction were sold. 2/3 of the auctions, because they have a minimum bid, did not sell. So it was a rather poor turnout for the auction, and that's why, the sell-off in the market for the I can't even think of the name of it now, for Sotheby's, and that's probably why. Who knows? I am, I know so little about the art business. I mean, my idea of art is the Elvis painting on the crushed velour where the eyes move as you go across the painting. Those are my favorites, but I don't know if I know very little about art, and especially, some of this contemporary art that people pay for. I just don't understand. I guess they enjoy it, otherwise they wouldn't buy it. Okay, back to the markets here. We've looked at Google, we've looked at Apple. And we are expecting a rally in here so far. We've got the rally this morning. What it's going to do from there, we'll have to wait and see. We also have a situation here in the Treasury bonds, because we are going to have an increase in interest rates. And when it is, I'm not sure, but we're having a pretty good rally here in both notes and bonds, which, when this interest rate thing will be announced, that'll be the big key, and most probably this has already been discounted by the market. So don't be surprised if you see a raise in interest rates and yet the bonds go up, i.e. lower interest rates, and that's just no more than a short covering rally that you can get, that you can see, with some of these things that you're seeing in the markets at this time. We were down 110 last night in the Dow, and now we're up 50. So we've had a 160-point rally in the Dow in just a matter of a few hours. This is correcting that oversold condition that it was certainly apparent on the charts. The question is, how much of a rally are we going to get, and how long is it going to last? That's the key to what we're watching here this morning. So we want to watch that very, very closely. Most of the rallies on the S&P will be between 25 and 30 points. We just had a 30-point rally that equaled the one that we had on Thursday. So we'll watch that very closely. If we get much above the 20-30 level in the S&P, yes, we could go a little bit higher, but this is a very bearish scenario, folks. There's no way. I'm just a technician, so all I can tell you is what I see, and I've been doing this for a long time, and I haven't seen stocks this bearish in a very, very long time. I mean, this New York Stock Exchange Index is the one that really tells you what's happening, and this is not a good picture to be down 3% the first week. And we'll watch this quality of the rally that we're having now, but keep in mind that this is not a bullish chart picture. If I'm wrong, the market will take back everything that it lost last week and get above those highs that we made last week, and then it's time to take Luigi, my little pet donkey, out into the desert and riding one more time up into the sunset. But that's not going to happen today. Maybe it'll happen later, but that's not what I see happening right now. So keep that in mind. Now, I had a question from one of our listeners via email about the junk bond market. And I wanted to bring this chart up to show you that, rates in the junk bond market, you can see, have really skyrocketed here, and we're heading down to, it looks like a 3 drive to a bottom pattern down around another point or so here in the junk bond market is what it looks like. This is also related to the potential interest rate increase in December that the whole world is talking about. So that's the main thing that you want to be keeping an eye on, or watching it anyway. So that's what we're watching so far. Now, the German DAX also did the same thing. Last night, the German DAX opened down 200 points right on the low, which was right at a beautiful retracement of the previous day's low. It was 382, I believe, of the low from the contract low that it made just recently back a few weeks ago, and it immediately rallied 250 points with hardly any of a retracement at all. So that was the thing that started our markets to move, was once the German DAX opened, our market started to rally out and come out. Someone's asked me a question here about when does quantitative easing stimulus run out. I have no idea. I don't understand it. The explanations that some people have given me, and all of them are different, don't make any sense to me, but I don't understand what they're doing, and they certainly are not telling me what they're doing, but I'm just looking at the charts. That's all I look at. I don't really see that anything different than what we're looking at right here. So we're watching. We're having some good buying today. The advanced decline line's up about 1,000 so far, which is pretty good considering how bad it was on Friday. And so we are getting that little bit of a bounce because we're incredibly oversold in the stock market. So it's not unusual, to get a bounce like this. So that's the key to watching these oversold situations. Longer term, folks, this thing looks really bad. That's no matter how you look at it. We'll take a look here at the SOX index, which is the semiconductors. Here we had the same situation where we had the big Gartley pattern going up just a little above the 61% retracement, but you can see these have been rallies in a bear market. This was a perfect A, B, C, D move, stopping right on the D point up there at that 684 level. Now we're down about 643. So until we get above 684, this market appears to be, moving down, to the downside. We got a little bit of a bounce in the VIX index, which for that index to bounce is really not much happening. But we'll bring it and show it to you. There's really not much fear in the market at all. Virtually none. And as you can see here, we did get a little 5 or 6 day bounce here in the VIX. Of course, that'll be corrected today. So we want to be watching it really closely. The key here is the quality of the rally that we're getting here for Monday, Tuesday, Wednesday. That will be the thing to watch, because if it does, then we'll look and see how it's going to hold. But we'll wait and see how this rally unfolds. It won't be more than 2 or 3 days, in my opinion. That's what what the technical picture of a bear market is like. The rallies are quick. They dry up very fast, and then they head back down really quickly. The first sign that we're going to go higher is if we get above this 2030 level in the S&P, and that would tell us, yes, that we are probably going to get up into a little bit higher level. But at any time, this thing could, give up its ghost. And with the long term, folks, you've got to pay attention to that big down move that we had. They rang a bell when that happened, folks. There's something not right out there. Things look very bearish. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I wanted to just get on my soapbox one more time and bring up this chart of the New York Stock Exchange Index and how it compares to what happened in 2007. You know, maybe this is a big trap, and they're going to run it back up, and if they do, more power to them. But right now, this chart is extremely bearish. This is a weekly chart, folks. This isn't for day traders. Believe me, if we get below, you can see what happens if we get below that August 24th low, which was equivalent to what happened back in 2007. That's when we started to lose Lehman Brothers and also Bear Stearns. So be really careful in here with your portfolios and your 401ks and other things, because this is a very bearish chart. You won't see this very many places, especially the way that Bart did this with the divergences as far as, you know, the bullish divergence that we've had and then the bearish divergences at the top. But you see the retracements are exactly equal. I mean, they're to the tick. I mean, we're talking about out to the thousandth decimal point, 3 zeros. And it went above this Fibonacci number by 0.005 in 2007 and 0.005 just recently last week. But this time we reversed 3% the first week. We didn't do that in 2007. So this is even more bearish by looking at it from that point of view, the way it looks like from the cheap seats here in Tucson, Arizona, where it's raining cats and dogs. And the cats are winning right now. So we'll see what happens. We had an interesting football game here Saturday night. University of Arizona went into a double overtime to beat Utah 37-30. The game didn't get over till 11:30 at night. And the coach now, he gets $500,000 for getting a bowl bid. And if he wins the bowl game, he gets another $500,000. So being a college coach can pay a lot of money, but boy, there's a lot of pressure involved, I'm sure, just like it is in any of these coaching things, whether it's pros or whatever. We've got the Dow up about 50 now, S&P's up 9, and NASDAQ's up about 10. We want to see the quality of this rally, and we'll see what happens with this. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.